Hello, everyone. We're here to experience a wonderful presentation by Mr. Hartzler on 21st century budgeting using mint.com. So a little bit about Mr. Hartzler. Mr. Hartzler is a retired business executive who has been a financial advisor for the past 12 years. During this period, he has served over 350 individuals and families, doing all of their work on a pro bono, no-charge basis. His work objective is to provide the same quality of financial advisory services as a certified financial planner would provide, but to those clients who may not be able to pay a certified financial planner for such services. Much of Mr. Hartzler's work with clients involves helping them to plan and manage their income and expenses on a monthly basis so that over time they can achieve financial success. About 8 years ago, Mr. Hartzler began using mint.com with all of his clients. Since the Mint program is free to the user, it does the heavy lifting of budgeting and tracking income and expenses on a monthly basis. Before the development of the Mint program, budgeting and reporting were difficult, time-consuming, and error-prone processes. With Mint, this manual work is replaced by a 21st century automated process that anyone can easily operate. However, setting up a Mint account is a bit tricky, so I have worked with Mr. Hartzler to design a program to introduce Mint to you and provide follow-up one-on-one assistance in this initial process. We believe that if you can get started using Mint in the proper manner, you will find this tool to be invaluable in managing your money and achieving long-term financial success. Mr. Hartzler?
Thank you, Elena. I had the privilege when I retired in 2007 to spend about 8 years working with a group of certified financial planners. My background, as Elena has said, has been in corporate finance and corporate management. Never really did anything in the individual financial area until I retired. But I thought that would be a good retirement plan for me. I didn't really want to work full time and be in business, but I wanted to be engaged with people. And so that's the path I chose. And so I needed to be trained and learn what was really in that what that business was all about. I had a good friend that had just formed a new planning firm with several of his friends who had been in the business for a long time. So I was able to be in their offices and work with them as certified financial planners and model my practice after them. So to see how Mint fits into all of this, there are 5 things that a certified financial planner teaches his clients. And these sound very simple, and some of them really are, but some of them are also very difficult, including the one we're going to talk about today. If you have a pencil and want to write these down, they're very simple, 5 things. Number 1, you have to spend less than you earn. Spend less than you earn. Well, that sounds pretty basic, although in our economy now where there's all kinds of a chance for credit, it's possible that people can spend not only all that they earn, which is not good, they can spend more than they earn, and they can do it for quite some time. Now, it eventually ends up badly, but you can do that. So the principle is now you need to spend less than you earn. Secondly, you need to avoid the use of debt. And it's almost unavoidable if you're going to buy a house. Some people pay cash, most people do not. But avoiding debt, that's not your friend. It's not what many people teach today, but it's not your friend. If you can avoid the use of debt, you're better off. That means you're spending less than you earn. Third, you want to save for emergencies and major purchases. So you need to save. Now that it assumes you spend less than you earn, of course, you've avoided debt, and you have something left over to save for, when Murphy's Law takes over, when you need to buy a new car, whatever. Fourth, you plan and invest for the long term. So it's the story of the tortoise and the hare. The tortoise wins every time. It's slow and steady. That's how you build financial wealth. And then the fifth one seems counterintuitive, and that is to give generously and systematically. I've never seen a wealthy person who was happy who wasn't a giver. And you can always find someone who is less fortunate than you are, or a cause that you really want to support. And so it takes you out of the greed deal of I have to have everything, and it's just easier to manage things. It sounds counterintuitive, but it really isn't. So if all those five, spend less than you earn, avoid the use of debt, save for emergencies and major purchases, plan and invest for the long term, give generously and systematically, I asked the question, what's the hardest one? And I think, based on my experience personally and the experience of working with 350 families, it's number one. Spending less than you earn is not real easy. And it also implies that you've got to manage that process, and you've got to have some tools to do that. And as Elena alluded to earlier, we used to do this with Excel spreadsheets or big chief tablets or whatever. And then about 8 or 9 years ago, we discovered mint.com, and it really makes the job much easier. So you've got to set up a budget, have a plan, and then you've got to track against that to see, is it really happening? And if not, how do I make adjustments? So I want to, with people who are watching, I want to do a little role play, and don't be intimidated, because I'm going to play both roles for a while so you can kind of see what's going on. So the role play is that you are the owner of a small chain of restaurants in the Kansas City area. And I am your CFO. I'm your chief financial officer. I'm supposed to be keeping track of all the money that's coming in and going out and making budgets and all that sort of thing. So you call me into the office in the middle of the year and you say, it's been a tough year. Are we on budget? Are we doing okay for our budget? And I say, well, we were working really hard on putting together budgets for this little enterprise, but then COVID came in and we had a lot of other things to do, and it was just a mess, and we never really got around to making up budgets for this year. And so then you would probably have a long pause at that point in time and say, well, okay, but how are we actually doing? Like, I'm kind of worried about the Lee Summit restaurant and how's it doing? And so I say, well, since COVID-19, we really haven't kept that level of detail in our accounting records. Okay, well, you would say then, after another long pause, all right, how about the overall company? Are we making a profit? Well, I know we had to borrow some money in our line of credit at the bank and to avoid being overdrawn, so it doesn't look really good. And then now you can respond. And what your response would be, if you're a rational human, you would say 2 words: you're fired, because that's not acceptable, right? Well,
What I'm
interestingly enough,
paying you for.
interestingly enough, most families go through that same scenario, and they don't think that they need to have a budget or track against it, but they do have a business. It's called the family business. Most people can't afford to hire a CFO, so they have to do the work themselves, but you really need to plan for what's going to happen in your family. You need to track it, and when you get off track, you need to immediately do something that gets you back on track. If you do that day after day, month after month, year after year, you're not guaranteed to be financially successful, but the odds go way up. If you don't do that sort of thing, the odds are pretty good you're not going to end up in the place where you want to be. So the people who do acquire wealth, acquire it over a long period of time. They do these basic things systematically, and it works. So with that introduction and general purpose, that first objective, spend less than you earn, that's what Mint tracks. And I'm going to show you I have about 45 clients now that I follow them on a monthly basis that have Mint up and operating. And I'm going to show you one that I've had permission to use. These are all obviously real, and I have to get permission to use them. This is a real account. It may not look like the one that you would set up, probably won't, but that's the beauty of Mint. Each account can be set up individually to respond to your particular needs. And your needs are going to be a little bit different from anybody else's, that's for sure. At the end of this presentation, I'll give an invitation, give you my email address, and you can contact me. We can set up a one-on-one Zoom call or a meeting or whatever, and I'll help you set up your account specifically for you. And that's the real tricky part. If you can get it set up right, then maintaining it is really pretty easy. So at this point in time, I'm going to share my screen, and you will see a page out of a Mint account. Hope you can see that. All right. So Mint, first of all, is a product, and you can see my cursor here, of the Intuit company. Intuit brings you TurboTax, QuickBooks, used to have Quicken, sold that, but they're a big company out of California. They bought this product about a dozen years ago, and they claim today that it has 20 million users. So it's not something that you haven't heard of before. A lot of people say, well, I have a Mint account. Most of the time when I look at it, they haven't set it up right and they're not really using it. So of the 20 million accounts they have, I'm not sure how many of them are really actively used. But it is a big company. They have supported it very well, but it is a software that's free to the user. And it's, as you see, it is financed by selling ads. And you see all kinds of pop-up ads. That's how they get their money. That's how they can afford to sell it, have you use it for free. But what I tell clients is totally ignore the ads. I don't think they screen them. Anybody who wants to advertise can advertise. That's not the point. The point is using this thing to control your finances. And that it is very good at. So that's Mint. Now, along the top, you'll see a number of icons here: overview, transactions, goals, credits, all kinds of things. I only use 3 of these for my clients, and I'd recommend that's what you concentrate on. There's other things you can do, and they're kind of fun, but that's the basics of it. But first of all, the overview shows all of the accounts you have in Mint. This client has 3 accounts at Commerce Bank, Kansas City. There's a basic checking and interest checking account and a money market account or savings account. This client also has investments loaded in here. I would not recommend you do that, at least to start. This is primarily the area where you would have all of your accounts where you have monthly transactions. Now, a point about personal finance we didn't mention in the 5 basic areas, and that is in any financial arrangement, and especially in personal finance, simple is better. It's almost always better. So I work with the clients a lot to simplify their accounts. Theoretically, Mint is accumulation software. If you have not 3 but 10 bank accounts, and there are no credit card accounts in this account, but you could have 10 credit card accounts. I have one client who has 41 separate accounts loaded into Mint. Now we're working on that because I keep saying, Mint will do it. It can do it, but it's not ideal. So this lower number of accounts you can have, the better. Many people have multiple accounts just because they want to keep track of different things. Well, Mint does that. So you can have one checking account, keep track of everything, rather than having 10 to keep track of various things. So simpler is better, fewer accounts is better. I normally recommend you have, of course, a savings account and a checking account. Beyond that, this person has 2, but only 3 accounts, very simple to do. The other thing is that every account, every checking account, savings account, credit card account that you have, that you use on a monthly basis, has to be loaded into Mint. Because what we want to do is we want to capture every dollar that's coming into your accounts, wherever they are, and every dollar that's leaving. So everything gets captured, and Mint is excellent at doing that. But if you can get everything captured, then you know everything about what's happening. Every dollar coming in, every dollar coming out. So you just need to have all those loaded in. If you've got several credit cards, they all have to be in here if you're going to use them for transactions. So simplify, simple is always better, minimum number of accounts. Every account has to be loaded in here to capture everything that happens every month. When you log into Mint, as we've just done here, it will go in and interrogate each of these accounts at your bank. When you first set up a Mint account, you give Mint the electronic access codes to your account, and then you have a password and so forth, ID and password for Mint. So you log on to Mint just like you would log into your bank account, but then Mint goes and logs on with these codes to each of your accounts and accumulates all that data. So 6 hours ago, this person logged in and the balance in these accounts is shown. If you would have logged in at the same time in your bank, you would have seen the same number. So it's picking up the balances. So at this point in time, 6 hours ago, this person knew $15,190 in total. That's the balance in these three accounts. So it's kind of a quick balance sheet. Then we'll go to the transaction screen. And here, what Mint has done is taken those three accounts and it's aggregated them into one transaction register. So for instance, this first transaction on November 2nd was Hy-Vee, somebody bought groceries and used their commerce interest checking account to do that. And so we have that data. Now, down here, there's another Hy-Vee, and there the commerce basic checking account was used, a different account at commerce. Both of those go on to this register. And so it picks up every account in every account you have, every transaction in every account. So if you have 10 accounts, it's going to take all 10 of those and put them into one transaction register. So you see every transaction that transpired through November the 2nd. And this little transaction register gives you the date that it went through your bank, a brief description, which then you can add. You can add things in here, say, I'm going to do, yes, no need to do that, and I can't spell very well. There you go. You can write it's groceries, or you can make notations there. You could also click on this edit details. You can write notes down here up to 2,000 characters. We're really not done that much. And then you can set rules to always say, put Hy-Vee in the groceries and so forth. We'll cover that a little bit later. So then you have a small, just to save real estate description, which you can expand or annotate. It gives you a category, and these are your budget categories. So if you hit on this little up and down arrow, you see the Mint category menu. And there are major categories in alphabetical order: auto and transport, bills and utilities, education, income, home costs, so forth. And then under each one of these are minor categories. And under the topic of simplification, you could literally have 1,000 accounts using these. And if these aren't enough, you can add other categories. Usually 4 or 5 income accounts and 15 or 20 expense accounts are more than enough to use. So simpler is better, fewer is really better, but you can have anything you want here. So Mint will take each, to start out with, Mint will take each one of these transactions, it'll go through its logic, and it will choose a category from that Mint menu. It may or may not be the one you want, but over time you can train it by setting rules to always take Hy-Vee and put it in the groceries for you. So it becomes very, very automatic. And then, of course, the amount of the transaction, the money flowing out of your accounts is in black. Here you spent money. Here's a transfer of money coming in. It's in green. Here's some earnings coming in. here's an IRA withdrawal. It's all in green. Uh, and then when you spend money, it's in black. So that's the deal. So it's nice. This is in date order. If I click on here, I'll see this person has had an account since 2011. Every transaction in this person's accounts is in here for the last 9 years. And it's just incredible. And it's there forever. So everything gets captured. People ask me, even after they've been using this for a while, they say, okay, now where do I put in the data? And that's the magic of Mint. There is no data input. You don't put anything in it. You don't take anything out. I mean, you can add transactions. I recommend not. You can delete them. I recommend not, because it captures everything and then you have it all. So you know where you stand at all times. But it gets it all. It sets it up. Now you have to put it in the right category, and that's the tricky part. And you have to set up the categories intelligently when you start that. But it gets everything. So that's nice, but it's not, it's data is not information, right? There's a big difference. Here's the payoff. If you go to budgets, you will see, now November's young yet, so not much has happened. Let's look at October. I could go to any month in the last 12 months and pick out data for the month. But let's look at October. So in October, it's taken all those transactions in a particular category, and it's lumped them into this screen. So let's look at one that's kind of fun. Let's look at groceries. So under food and dining, we have two categories, groceries and restaurants. I bought it, drug it home to fix the meals, or I went out to eat. So if we click on this, it allows us to view the transactions for these groceries. So if I click on that, it takes me back to the transaction register. But here, instead of seeing 9 years of data, I only see October, I only see groceries and where those were purchased. Total of $481.92. So that's the magic of it. It's accumulating all these transactions, putting everything that's coded as groceries into that one bar. And we see for October groceries, $482. So that's the magic of it. And every one of those is in play. Now, as you go through the month, it will track the dollar on the left is the accumulation of that total. This 482 we saw, that's the total of these transactions. And so on the right-hand side is where you eventually load in your budget for the month. So I budget, let's go back to groceries. I budget $550 for the month. And at this point in time, it happens to be the end of the month, this time I've accumulated $482 of charges against that, transactions for groceries. And I get a nice little green thermometer here that says I'm under my budget. Now, up here, I had some problems with the cars. And so I spent $320, the person said $320 for service and parts on automobiles for the month, where the budget's 65. So now I get a nasty red bar. And it's very useful. I tell people, to go see this about once a week. Just go in here for fun, look at this budgets and see where the thermometers are. If it's the 15th of the month, a lot of these things ought to be about halfway over the end. If they're red bars, that's kind of a red flag to say, well, okay, maybe I've got a budget of $100 for restaurants. We're the 15th of the month. I've already spent $150 and I got a nice red bar. Well, that's a break. That's what you want to know. You say, well, okay, can I choose to go out to a restaurant or not? Yes, I can. I'll choose not to do that until next month. And so I've tamped down on my spending, and I've done it proactively. So every week I tell people, go in here, look at these bars. And if you see some red bars or you see some green bars that are way over to the right, and they shouldn't be. Now, some of these things are once a month. This insurance payment is probably just one payment. Yeah, sure enough. So nothing you can do about that. It is what it is. But a lot of these things are you can control those. by deciding not to spend money in the last half of the month if you see things are going over. So it's a great way to control things as they come through. Now, as I said, Mint will look at every one of these transactions and it will decide, well, it looks like that should be in some category, and it will choose a category. Let's say after we've had this for a while, you train it to put certain transactions in certain categories, it's automatic. In this case, $948 hasn't found a home in these income categories. So there's 6 categories here, and Mint has chosen something that's not one of these 6. That's the maintenance that you will have to do as a user of Mint. So if we click on this, it will say, okay, $948. Now I can view the transactions, and it is one transaction that's coded as income. So that's not hit one of these proper categories. So what we can do is go back here then, take the menu and reclassify that. Now, in this case, I happen to know that's income and it's a pension. So we categorize it as pension, takes just that much time. Now we go back to October and we look at it and voila, it's gone and it's up here. So that same pension transaction is now here. So that's the maintenance that has to be done every month. And I tell all my clients, once we get started here, you do that kind of maintenance every month. If it takes more than 5 minutes each week to do this, then call me because something's wrong. Okay, it should not take more than 5 minutes a week to do everything you have to do in Mint to get this monthly report at the end of the month. Incidentally, the income budget here is $11,408 a month. So far, $9,888 has come in. So it's adding up all these amounts and of course the budget amount and comparing that in total. So you get a quick summary of where things are in income, similarly in spending.
I
So
have a
let's look
question.
at, yes.
So I noticed you didn't press any buttons like save after you changed your category. You added pension and then you just closed that category and what? You didn't have to press any save buttons. It just stays.
Correct. Now let's do another one. This first one is trade commissions, and that's on the investment side. It's not a monthly budget, so we're going to ignore that. But here's one of food and dining for $20. Let's go back and see what that is. Well, here's all the food and dining subcategories. And this budget has groceries, as we talked about, groceries and restaurants. So those are the only 2 categories that this person is using. But in all of its wisdom, one of these transactions Mint has summarized as food and dining. And if you look at the menu, food and dining is a major category. But in this case, the person has 2 subcategories they're using. So we really need to get that into one of those 2 categories so we know which one it is. So in this case, Costco isn't restaurants, it's groceries. So I merely click on food and dining as the major category and groceries as the minor category, because I'm keeping track of 2 things within that major category. So I click on groceries, it populates it, and that's it. That's all I have to do. Now, if I go back to the budgets, it's going to default to November. I'm working in October. The $20 is gone.
Can you undo the transaction if you realize it was not the right thing to do?
You certainly can't. So that's going into groceries. So we click on groceries. It takes us back to all the groceries here. That $20 grocery thing was here, I think. So if I said, okay, well, I'll put that back in food and dining. It's not going to match any of these categories because I've got subcategories. And there it is, $20 rounded. So I know that's wrong. I go back and I change it to food and dining, groceries. Voila, it disappeared. So just for fun, coffee shops, the same thing. Starbucks, well, we really want that to go into food and dining restaurants because we don't want to subcategorize that. So that's done. And it should have disappeared here. It did.
Mhm.
Fast food. I've never really been figured out what's a restaurant and what's fast. This is Spin Pizza. So we'll just put that back into restaurants. And we'll go back to October. It's gone. Now we've got miscellaneous expenses. I happen to know that's actually groceries. So we change that. And then finally shopping. And we have two categories in shopping in this budget. One is for clothing for client and one is clothing for spouse. For some reason, you want to keep track of those two. So we categorize it there and we're basically done. So then you go back in any of these things and you can see, what happened. We looked at clothing for spouse. There you are. So in terms of maintaining the account, what's it's up, that's about what happens on a weekly basis. What I tell people is initially print out this sheet so you know what the categories are, and then you can very easily take any transaction and put it into the right category. Some of the kind of nuances here, if you choose multiple categories within a major category, you can't use the major category. You have to specify which one it is because you've chosen to separate it out. If, for instance, in entertainment, there are many entertainment categories. There's amusement, there's entertainment in general. Let's look at that. Yeah, you could have 5 or 6 or 7 of these or add more. But if you just choose entertainment, everything's going to fall under entertainment. It's much easier. You don't have to worry about the individual things. So I urge people to use the major categories here if you want to break it out. This is a good example. I like to keep track of groceries where I buy stuff and drag it home to fix versus restaurants. I know it's more expensive to go out here. So if my budget just get out of control and I can move things out of restaurants into groceries, I know I can save money. Or if I'm, I really want to treat myself, then fine, I go here. But I do want to keep track of that because I can control the total dollars spent by controlling what's, one or the other. Under health and fitness, you've got 2 categories. Yes, question.
Okay, so this is just something I was thinking about. So like for me, I get paid a different amount every paycheck because I'm an hourly, I get paid hourly. I'm a salaried employee, but it still depends on the number of hours every 2 weeks or every, from the 1st to the 15th of the month that I work, and then from the 15th to the end of the month that I work.
Sure.
So when you are budgeting and you are in a certain amount of income, assuming there's some kind of guy or something that is, going to be able to adjust the budget for depending on how much income that you have.
Right. So what I counsel people to do is to budget an income figure in any of these categories, which you are reasonably certain you will get. Maybe people have bonuses, but they're, whether they really get it or not. So I think it's good to budget conservatively in the income area. So you're pretty certain you're going to have at least that level of income. And then you can budget your expenses to match that. Then I've got clients who have a category of expense which just says, it's just bonus money. Okay. If I get a bonus, if I get some income that I wasn't really expecting, I'm going to go spend it. I've got, kind of a slush fund that I can use, and that's fine. So you may not budget anything in either one of those categories. But I counsel people to budget income where you're fairly certain you're going to get at least that level, and then budget your monthly spending so that if you get additional income, then you can expand the budget. But if you don't, then you've got a budget you can live with and you haven't spent more than you earn. Does that make sense?
Mhm.
And Minnow is going to pick up the actual number that you actually do earn and the number that you spend. So every month you're going to know the person spent $10,000, only earned $9,800. So that could be a problem if it repeats month after month. So that's what happens on a monthly basis. You can go back at any prior month for 12 months and see what May looked like and March looked like. All this stuff is captured. You can go up here and say, okay, what about this year? So I'm over my budget for a year, spending for a month, but how did I do for a year? Well, this adds up January through whatever we've got in November, gives you totals for that. If you want to click on, say, okay, well, what did I spend for restaurants this year? There it is, starting January 2nd through October 29th. It's just amazing. And then you can go into last year. At the end of the year, you try to do tax work and things like that and say, well, okay, well, what did I say I spent on the health insurance? There it is, dental insurance for the year. It's just a wonderful, wonderful record of what's happened in any one period. One other thing we ought to cover, and that is splitting transactions. Let's look at one that might be I just have to do this. Costco is a good example. You may go to Costco and I buy my glasses, my hearing aids, groceries, and tires at Costco. Well, obviously, those are four very disparate categories. Usually, when I go to Costco, I buy groceries. But if I had, say, okay, hearing aids, batteries are what I term out-of-pocket medical expenses. So I can split this transaction into multiple parts. So I can say, well, groceries, I really only spent $19.50 there. And I spent out of pocket for hearing aids, that would be health and fitness out of pocket. I spent $10 there for hearing aids. And now what I see is two transactions on October 28th, $10 for outpatient other, $19.50 for groceries, and a little sign here that says I split it out. And if I want to split it again, I can do it as many times as I want. So you could split it 10 times. That's something that's useful in the big box stores. Again, if you don't have a lot of different categories, you're not gonna run into many times where you want to split things. And I tell people, well, if 80% of the time you go to Costco and you buy groceries, call it good. Now, obviously, if I go buy tires, I just did that a couple of months ago, it was $549. Okay, well, obviously I would want to split that off if it was contained in the transaction, or change it to auto repair, not groceries, But those are things that will come up. The way I use it is I'll go every week and look at the overview just to make sure that everything is connected, it's coming over, and look at my balances. Then I'll go immediately to the budget screen and I will look for red bars. Well, of course, it's November the 4th and there aren't any red bars yet. But, October is a better example because I see some things like this. And then if I see something that's really looks like it's crazy, well, groceries is a good example. I'm over budget. Well, I just click on that and say, well, really? Is there something in here that's not groceries? Nope, pretty good. But occasionally you'll find things that have been misclassified, and that's an easy way to look up and see what's happening. Personal care, that's interesting. That's way over. Oh, somebody went to the barber and withdraw some cash to spend for those kinds of things. So cash is a little bit of a problem. Uh, um, because if you just get cash withdrawals and spend it, you don't really know what it was spent for. I have a $10 rule that I use and recommend for clients. I get money cash from an ATM, and I try to limit it to like 1% of my budget. But I'll go get 40 or 60 bucks in cash, and I'll go spend it. If it's less than 10, that transaction is less than $10, I'll just give it cash, throw the receipt away, and forget about it. And there'll be that 40 or 60 bucks that occurs in the budget down here in cash and ATM for the month. If it's 10 bucks or more, I'll whip out the debit card, which will then create a transaction that Mint will capture and has to be categorized. So that way I don't have a lot of money just flowing into cash where I don't really know where I spent it. If I can control 98 or 99% of my budget and throw a little bit of cash in the way where I don't really keep track of it, I'm going to be fine. If I can control that 98%, I'm golden. So using a debit card is very, very useful because that transaction will be captured. Now I have to deal with it one way or another. So that's about all I intended to cover. It's just a great tool. The minimum, 5 minutes a week is more than you need to maintain it. Setting it up is tricky. And so if you really are serious about using it, and I think everybody should really, give me an email. And if you write this down, my email address is JEHMPH, the number is 41 at gmail.com. So it's Joseph Edward Hawk Mary Pearl Hawk 41 at gmail.com. So you'll write an email to me, I'll respond. We can set up a one-on-one Zoom meeting. I can walk you through setting up the budget, how to do that, how to set up intelligent categories that will be meaningful for you, give you a tutorial on how to use this tool. When you first set up a Mint account, of course, you have to connect with all of your banks that you're using and get all those accounts in. That's the most difficult part. And then when you set up your budget, Mint will go back about 2.5 months and capture the data that in history for those accounts. And then it stops. It just, if you go back too far, it wouldn't be meaningful anyway. But lots of times you can look through that 2.5 months worth of data, set up your income and expense categories very intelligently, so it captures those kind of things and really have a pretty good start right off the bat. Things will happen in future months that you were not aware of, and then you've got to make a decision. Do I expand the categories, or do I lump it into one of my income or spending categories? For instance, this has an other income. It's kind of a catch-all. It's probably an interest payment of 2 cents. Okay, so but again, 4 or 5 income categories maximum, maybe 15 to 20 expense categories, using most of the major category options is usually enough to control these things and give you the information you really need. So that's really all I had. Any other questions from the group?
I'm sure everybody would want to know how safe this system is.
Good
Putting
question.
your
Good question.
private information online.
Right. So what I tell people is the Intuit people are very interested in this also, because obviously if people hack into their account and get into bank accounts, they're going to be liable too. So that they use the same kind of security systems that the banks use, because there's an interchange here between Intuit and virtually every bank in the country. Now, having said that, if you have not had your bank account or credit card account hacked, you will. And so I say, have strong passwords, change them periodically, and buy identity theft protection. What people don't realize, if you're hacked, it's not really your problem, it's the bank's problem. But it's very inconvenient to have money disappear until I've been hacked twice in the last decade or so. In both cases, it was hundreds of dollars. I got money back into my bank account within 48 hours, no problem. But it can be a real hassle. So the identity theft programs, $10 a month, is absolutely worth it, because you will get hacked eventually, and just having somebody that will help you out of that mess is worth it. It's technically not your problem, it's the bank's problem, unless they can prove you actually made those purchases. They have to put the money back. And of course, in the credit card, you can refuse to pay the balance. You get into, again, legal battles and all that. So that's why the identity theft protection is so important. But do all the things that you've been told to do by the banks. Have a very strong password in the Mint, just like you have it into your bank. If I were going to hack in, I think I'd go direct to the banks, because here you'd have to hack in the Mint, and then you'd have to hack back into the bank. It'd be simpler to go to the bank, but it could happen. I don't know that it has, but certainly people get hacked through their bank accounts and credit card accounts all the time. So buy identity theft protection. It's worth it. So this is as safe as your bank account, probably more safe, but it's not, doesn't say you won't get hacked. It was a good question. Glad you asked that.
Well, thank you very much, Mr. Hartzler. I'm sure lots of people will be interested in this program, and I'm sure they will contact you once they learn about this. So now, would you please stop sharing your screen? Well, thank you. And we will see you next time.
Thank you so much.
Thank you. Have a great day.
Bye.
Yes, thank you. That was very interesting. I appreciate the information.
Thanks, Don.
Thank you.
Thank you. Bye-bye.
So I'm leaving.
Yes, thank you.